Tired of dropping your phone or struggling to prop it up? Meet the Pop Sockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Hello and welcome to the Bitcoin Bulletin. I'm your host, and today we're going to dive into a fascinating story about Bitcoin's options market. Traders are piling into $300,000 Bitcoin calls while hedging at $85,000 puts, leaving many wondering if this is a signal that the market is bracing for something explosive. Let's take a closer look at what current data reveals about momentum and whether traders are preparing for more upside or bracing for a pullback. The June 27 Bitcoin options expiry on Deribit reflects one of the most tightly concentrated setups in recent months. Total open interest stands at 123,528 contracts, composed of 77,077 calls and 46,451 puts, resulting in a put-call ratio of 0.6. This ratio suggests a continued bullish lean in positioning. The max pain level, where the most aggregate losses would be realized across both calls and puts, is located at $100,000. Above that level, bullish positioning becomes more visible. A significant spike in open interest appears at the $120,000 strike, indicating that many traders are eyeing it as a short-term upside target. One of the most notable data points is the surge in call open interest at $300,000. While strikes at $200,000 and $220,000 show some activity, the aggressive positioning at $300,000 stands out. This type of exposure is likely tied to tail risk hedging or asymmetric upside protection, potentially by institutions or large spot holders. On the downside, the $85,000 strike holds the most concentrated open interest. While some protection is built between $60,000 and $90,000, the volume drops sharply below $85,000. If Bitcoin trades within the $95,000 to $105,000 range as expiry nears, many options buyers on both sides may face decorrelated losses. Now let's look at the June 25 expiry, which offers a more evenly distributed structure. Total open interest is lower at 40,267 contracts, with 25,109 calls and 15,158 puts. The put-call ratio remains at 0.6, indicating a similar bullish inclination, though with a more measured approach. Call open interest is spread across key levels at $120,000, $130,000, $140,000, and $150,000, with relatively even distribution. Unlike the June expiry, there are no outsized bets far beyond current spot prices. The max pain for July is positioned at $104,000, slightly higher than June's $100,000, suggesting a gradual upward shift in pricing expectations. Much of the July call exposure becomes meaningful only above $110,000. Unless BTC breaks through and holds above that level, a large portion of bullish open interest may remain inactive. On the put side, July mirrors much of the structure seen in June. The $85,000 strike continues to act as the key downside hedge, now joined by increased activity at $100,000. The Bitcoin Bulletin is always looking for signs that the market might be bracing for a big move. And right now, it seems like we have traders piling into call options and hedging down with puts. But what does this tell us about the market's outlook? Well, the June 27 expiry suggests a market tilted toward the upside, though with different expressions. June shows more aggressive exposure at the high end, particularly at $120,000 and $300,000, while July reflects a more technical and layered positioning framework. Bearish hedging remains limited in both cases, with $85,000 acting as the key zone of downside defense. The absence of deeper hedging under $70,000 suggests a low probability market view of capitulation. So what does this mean for Bitcoin's price? Well, some analysts are saying that recent moves might be marking the beginning of a broader breakout. The return above $106,600 is being read as a short-term structural shift following several days of tight, bearish price action. According to Ali charts, immediate upside targets at $108,300 and $110,000 are in play. And if Bitcoin breaks through this level, it could be the start of something big. And Michael van de Poppe is also bullish on this breakout, saying that holding above $106,500 could attract more buying interest from short-term traders. The situation remains fluid, but one thing's for sure, the options market is always worth watching when it comes to Bitcoin. As always, do your own research, trade wisely, and never invest more than you can afford to lose. That's all for today's Bitcoin Bulletin.